Stocks are being called the worst thing to own right now. And the economic news is just getting more bleak as we head to the end of 2022. Upon news of rising interest rates and CPI numbers, stocks have dropped nearly 1,000 points. The real estate market is set to collapse as the Fed tightens its policy and raises interest rates. And analysts are looking at the bond market saying it's the worst bear market for bonds that we've ever seen in history. Now, current economic events are really rewriting the investing rulebook. Traditionally, investors would lean on stocks, bonds, real estate to build a well-diversified portfolio, but in a post-pandemic world, all three major asset classes are suffering tremendous shakeups and losses. Monday's CPI number came out. We're sitting at about 8.3%, and on that news that inflation is really not going away, and everything the Fed has done up until this point has not had an impact on inflation, the Dow dropped nearly 1,300 points. In fact, year to date, all three major indexes are down between 15 to 30%, entering into bear market territory. So with inflation sticking around and showing that it's not going to get any better anytime soon, the Fed is getting incredibly aggressive with their policies. In fact, Jerome Powell came out and he said, we are going to raise interest rates consistently moving forward. We know it's going to cause pain in the markets for Americans, and investors should really begin to prepare for that. It's a pretty glaring statement from the head of the Fed to actually come out and announce that to the American people, that they need to prepare for what's coming. We're expecting probably a full point rate hike at the end of September and moving into 2023 because inflation is not getting any better. And on the other side, you can expect inflation to stick around between the next 2 to 4 years at a minimum before we get back to that 2% rate target that the Fed is looking for with inflation. Now, investors that are still relying on the stock market should be prepared to ride it out for the next 10 to 12 years for valuations to get back to their current levels. For those of you that are looking for a better way, I'm Mackay Block with American Hartford Gold. Give us a call today. We'll talk to you about how putting physical gold and silver into your portfolio can actually diversify and hedge against what we're seeing economically right now. There are other options for you. You don't have to ride out a bear market and see everything you've worked for begin to dissipate just like in 08-09. So give us a call. We'd love to speak with you, and we'll catch you soon.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.